Supply chain problems bad for Ford's third quarter, but full year guidance is still intact, according to the folks at Morningstar. This note is written by David Whiston, and he went on to say that Ford announced after the market close on Monday, the 19th of September, that its third quarter results to be reported on the 26th of October will suffer from supply chain problems, costs causing about 40,000 to 45,000 vehicles to be partially built but not wholly wholesaled to dealers. They calculate an EBIT and EPS hit of about $337.5 million and $0.07 for the third quarter respectively, assuming an average selling price of $50,000, 45,000 units lost, and a 15% EBIT margin. Ford calls on these vehicles awaiting parts such as chips, wheels, vehicles on wheels, and it's been an ongoing problem due to the chip shortage, as well as likely from COVID-19's absences in supplier plants, and possibly from the war in Ukraine. GM had 95,000 partially built vehicles as at the 30th of June, while Ford had 18,000 of these vehicles. The third quarter vehicles on wheels are high margin light truck models, including pickups, but Ford expects them to be completed and wholesaled in the fourth quarter. So it's not changing its full year adjusted EBIT guidance, including Ford credit of $11.5 billion to $12.5 billion. Ford said its third quarter adjusted EBIT will be between $1.4 billion and $1.7 billion, which is well below the Refinitiv consensus of about $2.8 billion, and also said it sees inflation related supplier costs about $1 billion higher in the quarter than expected. The folks at Morningstar expect these costs are pricing adjustments to suppliers for high raw material costs. Ford stock fell about 5% in the post-market session of Monday the 19th, which they see as a bit of an overreaction. Okay, where they're not seeing, where they're not changing their fair value estimate, because they have already been modeling adjusted full year EBIT of $11.3 billion in case of further supply chain disruptions and uncertainty around chip shortage recovery. Ford will need a strong fourth quarter to meet its guidance, and they think the market will be skeptical of the stock until Ford can deliver on the guidance when it reports full year results early next year. And given that skepticism, we think there is a good chance that it can maybe drop further towards $12.35, $12.09, $11.83, even all the way down to $11. That will be its 52-week low towards $11. So let's see what the short interest on the Ford is saying. Let's get it that. It doesn't look like it's going to be a lot short interest on Ford. Let's see. So while we're waiting for that short interest, we also think it can rebound to around $17.88. So the short interest is at 2.75, not anything significant. But in the off exchange, some people want to or don't disregard this figure, 48.16%. So they will say yes, there is some skepticism given this off exchange for the 8.16%, and they will always add that to the mainstream one that will now bring it up to almost 51%. So yes, we think it can rebound to $17.88. $17.88 will take it above its 200-day moving average. 17.88 will be somewhere around here, just close to $18. that will be the sort of level where it was as of late March of last year, late March of this year, 2022. Well, how likely is that? Okay, who knows? But in any case, in the last trading session, the session of the 20th of September, it lost 12.32%. So an upward target of 17.88, but downward projections of from 12.35 all the way down to 11 for Ford. See what you make of it, and thank you very much for watching this video.